Hi, everyone. We have an excellent elite technician with us today. I'm Dale Pinkert with TradeGATEHub.com, and I'm joined by Rohit. And Rohit's last name, I know I get it right usually, Rohit, so it's Srivastava.
That's right.
Pretty good for an ugly American, huh? So yeah, I've talked to Rohit quite a few times, and I've seen him shift market directions. He's not a perma bull or bear. He's just a perma technician, and has some very good foresight. So welcome to TradeGate Hub, Rohit. Appreciate your time today.
Thank you. Thank you so much. Great to be here.
Okay, so
very interesting time in the market right now.
Yeah, okay, it is. Last time you and I talked, you were I can describe it as sanguine, and conditions have really tightened up. There's been a lot of risk off, and I know that W.D. Gant says if you don't learn how to change your mind, you won't have any change left. And I'm curious if this is you're still with the narrative that there is going to be a bull run in the Nifty and in risk. If there is going to be a top in the dollar, and perhaps we're doing it this week, or has your narrative changed to becoming more bearish?
So I have had to change my narrative for the time being. Some of the narratives remain for the longer term. Things like whether the Nifty is in a long-term bull market or whether the commodity cycle is still intact. The answers to that might still be yes, as we look through the charts. But I think the risk of a serious setback increased in the month of April. So I think we spoke in March, and in April, by mid of April, I'd changed my mind on the Indian market because I'd been bullish, I think, since May of 2020. Once we decided that this was a reflation trade, is what I was calling it, on the back of the falling dollar.
I can validate that. I do remember, because prior to that, you were a deflationist, and you saw this whole inflation surge coming and risk on.
Yes.
Who's right all the time? And isn't trading and investing really a process about sometimes, at times, you even have to be the wrong way in the market to know to go the right way?
Absolutely. You hit the nail on the head. I have this problem with so many of my followers, explaining to them that it's a process. Yes. And they just don't like things when I say you need to manage risk, and they're like, what are you talking
What's
about?
That? Risk. I read a book. On trading. Why shouldn't I be able to do it? I read a book on brain surgery. Why can't I do it? So, okay, so I'm going to quiet down here and listen to what you brought. I thank you for preparing this nice presentation. So let's start off with what the sine wave is telling you.
Yes, so I start with the sine wave always because of exactly what we discussed, that we need to change as the cycles go, and trying to identify these cycles is what we do. So we want to know where we are within this cycle. And for that, we don't just study all the macro factors together, everything in technicals. And when we do macro, so we actually indirectly mixing economics with what we are seeing on the charts in financials. And at the same time, also built a momentum indicator, which allows me to smoothly try and map the same thing on a daily, weekly, monthly time frame, so that we can actually look at that in terms of rate of change. And so that's the model. So that's why I actually like to talk about the sine waves. So then with that, so this is actually just a sign of how my momentum indicator looks like. It goes both ways. Currently only on some Indian platforms it's available. It's not on every platform around. But we try to map and capture each cycle using this, apart from using Elliott wave. So I actually put Elliott wave and momentum together, so that we can actually capture each of these swings.
So what do you have there? You have a momentum indicator, which is just called momentum, the green line, and the red line.
The green line. So I actually have named it with my name. I call it Rohit's momentum.
Okay.
It's available on one of the Indian brokers known as Sher Khan, one of the larger
I'm going to
brokers
call
on
it
their
the
platform.
Dale momentum. Are you going to sue me? Do you have a copyright on this one? All right. So, all right. And what's the red one?
And the red one is a 9-day exponential moving average of the indicator itself.
So you look for crosses as triggers?
Yes.
Okay.
Yes. So I look for crosses, and then I look to ride the cycle using it along with moving averages, which you see at the lower end, right? So like the 20-40 averages, because sometimes, as you know, when momentum indicators whipsaw, averages hold out better. And so we use that combination so that we can actually ride out this cycle to the complete. So if it's holding the averages and there's a whipsaw in the indicator, we still want to continue to be on the long side. And along with that, of course, continue to put our wave counts on it so that we can capture the entire 5-wave sequence as well. So that's sort of my modeling of, how I try to figure out where I am in the cycle.
Okay. So this chart goes to 2001 at the bottom. That's what it says.
Yes.
Okay. So you want to show us as time progressed, or this is a example of capture?
Yeah. So this was just an example of the methodology.
Okay.
And I think the last time we discussed discussed the Indian market.
Yeah.
What I was really looking for is, whether we've completed this long-term 50th. This is a 100-year chart, all the way from the 1940s. And we are somewhere in the late stages. Did we complete it? Are we still completing it? I think that's one of the things. I was looking at the transition from an economic winter to the economic spring, specifically in India, because India is sort of around 10 years behind the US, because we only globalized since the early 90s. And so a lot of the economic events that happen in India happen a little later. For example, US had its banking crisis in 2008, and India had its banking crisis in 2018, where a couple of NBFCs went down, and there was the NPAs had crossed like 12-13%, and those non-performing assets had to be written off. The government stepped in, and so we went through that process between 2018 and 2020. So after that, now the question is, how do we really restart things and get the economic spring going? Now, of course, the pandemic has helped everybody because of all governments around the world, including us, stepping in, doing some kind of stimulus, and that's pushed markets up. And now we are trying to figure out within this, where are we? So when it comes to the Indian market, so I'll just start with some of the changes that I've made. Okay, and the reason for those changes. So this is one of the charts explaining what has happened in terms of intermarket divergences. This takes us back to classic Dow theory, where Charles Dow specified you look for divergences between, say, the transports and the utilities, and we've seen those kind of divergences both in the Indian market and the US market between, I think, the last 6 months, where the main indices were not confirming with some of the other sectoral indices. This one, of course, shows the metals index in India. The Nifty Metal Index made a new high in April, which is one of the reasons I turned bearish on the Indian market, as the metal index was the last one still holding out. And once that rolled over, I said this entire structure here on the Indian market might be a distribution pattern, which means in the form of some kind of an expanding pattern, which is now rolling over. So it could be ABCDE in terms of a topping triangle. And if that is true, then are we headed for a much deeper correction is the risk I was trying to pay off. So somewhere around here.
Let me interrupt you on the metal index. I'm not sure. I'm sure our viewers aren't. Does that metal index include gold?
No, it includes
all industrial
base metals. Yeah, industrial metals.
Okay, more affected by the economy.
Yes.
Okay, like copper, etc. All right.
Yes.
So,
yes.
All right, go ahead.
So yeah, this was this classic, I think, intermarket divergence was one of the telltales. And so I'm just going to, so I actually wrote a very detailed report, which is known as the long short report. I'm going to just show a couple of charts from here. So this is a similar thing which has happened in the US. This is the Dow Jones Industrials Index, lower high, and this is the Utilities Index, higher high. Yeah. And this is the same kind of divergence we've seen in India also between the power index, which is also utilities, and the Nifty itself. So I've taken that as a sign of a potential distribution happening in the market and things rolling over sector after sector. So now that you've seen these divergences, you get to the point where you get a much more broad-based decline in the market, where every sector starts to fall, and that's where I think we are in both in India and US. US is of course ahead. India took a little longer to see that distribution through. Though a lot of mid and small cap stocks did give up from January on. But I was hanging on with my view because I think the commodities and metal index is where I was more bullish. So which is why, and power, of course. So which is why I was not turning bearish at that point of time. The other reason is the dollar itself. So my whole thesis since 2020 was on the dollar index. Okay, so just going to that chart.
The upside surprised me too. I'm wondering if you think you think that there's more left, but 102.75 is I have 102.35. That was where I had the breakout. But go ahead, tell us what you're seeing here.
So once we have that breakout, it clearly means that the whole bearish thesis had held since 2017 that the dollar index is in a bear market, and it would probably last for 7 years, which means I thought it would go until 2024 has been disrupted. So 2022, I think 2 years ahead of time, we've broken out. And that was based on the previous cycles. Each of the previous bear markets in the dollar had lasted for 7 years. So I was just making a rough estimate. But now that it's broken out, which means that the previous uptrend is still intact and in force until we don't really go back below the breakout point, we could be looking at higher levels, maybe even 110, 112 to start with.
So that's the key. All right. Yeah. The key is at 102.75, which, I had a little lower, but it's would be back under the COVID high. And what I don't understand is I'm seeing some analysts saying, yeah, we could get a pullback here to 100 and then make a new high. But to me, it's game over back under the breakout. So if they're looking for a pullback and then a cup and handle, to develop.
Well, a handle would be very steep, but in the short term, if I really look at the very short term chart, if I just put a band on top of the dollar, okay, so this is the dollar index today. This is the
rolling chart. Over.
Yeah, it's showing signs of rolling over, but what I would do is I would probably put a Bollinger Band on top of it. Okay. And so if you do get a pullback to the lower band, sometimes that's normal in every pull, as we've seen here also in the month of March.
Yeah.
And when it paused in March is where we got that big bounce in equities. So similarly, are we going to get that over here? Will be a question mark. But what we have seen throughout this dollar rally, and I've put these numbers on top, is the sentiment not working. So each time you had the daily sentiment index hit a very high number, we saw the dollar index pause. I thought the downward trend would resume, but it was only temporary. So here you had a 92% reading, 92, even recent high is 93. So we're getting a pause. We cannot really call this a reversal because very strong bull trend, overbought readings don't work beyond a short period of time. So
okay, but if you're calling 102, what's your number? 102.50 a breakout?
Yeah. So if we do pull back even to this lower band, which will be just around 102, I'll still, I think, retain the bullish view.
Why is Mr. Market going to be nice to people who miss the breakout and pull back and say, hey, I know you missed this trade, right? But you know what? I'm going to give you a chance to get in underneath the breakout so that you even get a better price than, technicians who took the signal that's now being negated, but you can buy today.
Well, it does happen.
Mr. Pigeon.
We do get pullbacks, ideally not back in, but we do get pullbacks after a breakout. So it's something that you have to be prepared for. And so I give it room based on the bands. I'll give it room till 102.
Okay.
And if that holds, probably the upward trend resumes. The other interesting thing happening though today is that this decline in the dollar is actually happening with a decline in bond yields. So I'll just come back to this concept. I have a chart on it. I'll come back to that concept.
Go ahead.
In fact, maybe I should.
I'm just giving you a hard time anyway, right?
Yeah.
All right, go ahead.
So, and this chart I take from reading Martin Pring, a very popular technician, some of the best books on the subject. And what I see here is three cycles between bonds, equities, and commodities. And what we've seen over and over, I think over at least the last couple of cycles, is the bond market is usually the first to top out. So when we say first to top out is the first one where we start seeing bond yields rise and equities are still rising along with it. Then eventually equities peak out at some point as yields go up a lot. Then equities roll over, and the third is the commodity market. So this is a cyclical thing that we've seen. Even in 2007, we can see yields went up 2006 onwards. Equities peaked in 2007. Commodities peaked in 2008. Oil all the way till June 2008 was still rising. So this year we've seen something similar. 2021 bonds peaked. We saw yields still rising with equities, and equities peaked in January of this year. And commodities are all peaking out in the last couple of months. I think oil maybe in March, and then gold also along with that, and copper I think in April, possibly peaking out. So so now with all three going down, what we really be looking for is going to be a bottom in the bond market first. And a bottom in the bond market doesn't necessarily mean that it's a bottom in equity. So that risk of play, which has been missing, so typically we've seen bonds and equities inversely correlated. And right now for a while, we've seen both bonds and equities fall together. I think, and we can see that in the last few days. Here, this is bottom is the bond yields, not the bond price. So yields have started to fall along with equity prices, which is your risk of trade settling in. And that might just be the beginning of the harder part of the market sell-off, because equities are, you're actually getting that shift.
Because there was no flight to quality all the way down. The bonds led it. They just recently made a new low. So I know a lot of people are looking for like TLT to bounce to about 122. And they're saying that this bounce is a 4, which implies that there could be one more shot down in the bond market after this rally. Does that concur with what you're thinking?
Yeah, that does concur with what I'm thinking.
Okay.
Though as the model does suggest, so I'm keeping both odds open. And when I look at it a little more broadly, yes, I do feel there may be a fifth pending. But because we've already reached the 2019 low in terms of the bond price,
and high yields,
it's also possible that we've gotten the high in bond yields. Okay.
Yeah.
And that would fit well with this model that the bond prices bottom out first, and they bottom out as the risk of trade, the flight to quality really takes hold.
Yeah, it looked like a head and shoulders formation a bit to me in the 10-year, with the neckline a little bit lower. See that?
Yes, so but we correct. The short term, this part.
Yeah. Measures about 250 or so. Yeah. Okay. And I see you have gold labeled as a C down there. So, tell me, support my bullish position in precious metals here.
So
do I have it the right way?
I guess the falling dollar right now in the short term is providing room for a gold run-up. But what has happened also is that, and this is a very nice channel here, but what has happened also is that it's broken supports on the weekly charts and all, which are a little, which are not really supporting a substantial rally. So it might end up being an X wave. So I'm not so sure whether this bottom will be something that will hold out for long. You might get a short-term rally, but it may fail again. And because we are still bullish on the dollar, I'm not ruling out the possibility that gold does test a much lower level, maybe even the bottom end of the range near $1,700 before we are done.
Yeah, well, if it's going to do that, why not just clean out the stops like silver did, under that 1680 level?
Yes.
Clean out the stops, so like silver did. Now, silver, to me, what do you think? I mean, it's kind of doing what I talked about. Maybe the dollar will do that. That was a pretty clean breakdown. It took out all the sell stops under 2140, and now we're threatening old support is new resistance. We're threatening to make this kind of a false breakdown here, aren't we? or am I
Yeah.
delusional?
If I look at the structure, you're right. My original expectation was that at the most it will test this lower line and then come back.
Yeah.
And it is showing signs of that. What I'm really scared about, though, going all out on this trade is actually the dollar.
Okay.
Whether that will create any further risk to the downside to commodities in general. And so that's why I'm not. Otherwise, if that was not the case, if the dollar was still showing me signs that it's going to be weak and going to roll over, this looks perfect.
You don't have a bearish alternate count in the dollar
on
that
silver?
it could be completing up here? Anything? I mean, I know that as an Elliotician, there's always alternate counts. May not be
So
preferred.
the alternate will be to mark the bounce as an X and continue another ABC down.
Okay, I see. So
this.
either way, they're bearish. Just a matter of whether there's a decent rally first.
Yeah, and so then the easier way will be to put up a retracement. Maybe look for 50% next if it does go down. We've already done 38% of the entire move. So I'll not change marking the top as 1. So that's sort of what I've ended up doing here when I go to most of the commodities or the emerging markets. So everything which is inverse to the dollar. So we just go over each one by one. First one is the emerging market index. So the first thought, of course, is to take it as wave 1 and wave 2 for the EEM or the emerging market index.
So EMs, you would be looking for it to, this is wave 1 down, and now we're looking for a 2 bounce, or?
No, this is 1 up and 2 down.
Oh, okay.
So, yeah. So it was a bullish breakout from this triangle, which was a 4th wave.
Yeah.
The breakout didn't hold, but I'll still consider that it may just be 1 and 2. And because it's wave 2, it's getting much deeper. And this is sort of what I'm doing with all the other assets as well, including commodities. So this is the Bloomberg Commodity Index.
Okay.
Looks like a nice deep bear market, wedging formation, breakout, strong rally. But it's hit a wall. And so I'm opened up to the idea that this second wave could be a little deeper, much more steeper. And then we'll start a third wave. So the longer term outlook for commodities still intact. But I think till we're going through this tightening cycle, we might see a second wave, which could end up being steeper than what we were looking for.
Okay. Are you convinced that Powell's not going to flip when he sees like, I don't know, 3,000 S&Ps?
So that's an ongoing debate. I'm hearing a lot of hedge funds and all have, will he flip, won't he flip? Will he flip?
Or just say not flip. How about just pause?
Yeah, but by the time he flips, will something have broken? I think that's the real risk that markets are trying to price in. And if something's already broken, in fact, there's so much data which is already showing that you're slowing down. And if you're slowing down, will you really hit a recessionary environment? And India's actually been behind on this in terms of raising rates. So we didn't raise interest rates till one day before the May meeting. Just one day before Fed's May meeting, the RBI came in with a surprise meeting and said we are raising rates by 40 basis points. And so India went into a shock right there because people were not prepared for the idea, because the RBI also here, the Reserve Bank, had been saying that we're going to keep easy monetary policy. We're going to be supportive of growth. They were saying that till April. And all of a sudden, they changed their stance, saying that we need to tighten. And so that's risked our own currency, which is the USD INR. So the rising dollar, which was so far not having an impact because the Reserve Bank was intervening in selling dollars directly into the market. I think now that they're starting to play with interest rates, the Indian currency, which is the USD INR, actually starts heading much higher from where it is right now. And so that's the direct risk to Indian equities, a weaker currency, along with higher bond yields.
Okay, yeah, that's not a real good concoction.
Yeah.
That's kind of like protecting from capital flight, isn't it?
Yes.
Okay. So
yeah.
I know we've covered a lot of things in the market here. What else do you want to,
So there's something similar to what I'm expecting, say, then on the Nifty itself. So the Indian index, the Nifty, the last time I discussed, we were in the fifth wave. I was not sure whether we'll subdivide into 1 and 2. Now I'm sort of concurring that this is wave 1 of the fifth wave. Yeah. And we are getting a deeper wave 2 correction, opening up to the idea whether it'll go back to the fourth wave, which is at around 14,200, or will it really become deep in terms of doing a 61% retracement, which would end up being near 11,800? Keeping odds of both open, not sure which one will be at play, but that still gives us a lot of room to the downside, because today also we are at around 15,800 and 14,200 is still around another 1,600 points down from here.
What's your downside target for SPX on this pullback? Why are you laughing?
I didn't see that coming.
Okay. Well, you know, I am here in California. I don't trade the Nifty as much.
Yes. So I'll open up the.
Who's that stick man up there that you have? Who's that guy? All right.
So I've marked this as an ABC decline. What I was trying to sense is whether we'll get a subdivision in wave C, which means wave 1 of C and 2 of C as a bounce. So far, it's not looking like. Yeah. And if it keeps extending without a bounce, it'll end up looking very similar to what we saw in the year 2000, the Y2K pop, where the third wave was pretty much extended with multiple, small bounces and a long way down.
1-2s, all the way to 3,100.
Yeah. So yeah.
Okay.
I'm open to. In fact, I think may sound scary a bit, but if this is really a break of the entire bull run from 2009, specifically on the Nasdaq, then I would not rule out that why shouldn't it go back to where it started, which is the COVID lows.
7,000.
Yeah, back here, 7,000. Why shouldn't that happen if this is really the parallel? And the parallel is in terms of how well the Nasdaq is really channeled. So if I actually take a monthly chart, and one of the charts I have drawn is essentially to take this entire last leg inside a channel, the breakout and the failure, and the same thing over here. Okay. And both of them also break the monthly average. So we are very close to the monthly averages. We've gone back inside the channel. And I think by the end of this month, if the Nasdaq is breaking the 40-month average or the monthly bands, then it looks like a very similar setup to go back to the previous swing.
You know what? I want to acknowledge you because you knew when you came on that from the last time we talked, it wasn't going to be, such a great setup for you. But you came back and you said you changed your mind, which means, you were wrong for a while. And now you're right for a while. And, a lot of people would want to be revisionists about their forecasts, but thank you for your authenticity and being transparent during these interviews, because you're a pro. And anyone who says that they're never wrong, you run away from them. So it's okay to be wrong, but not to stay wrong. Right, Rohit?
Perfectly.
Yeah. So I really appreciate your views. Any quick comment on crypto? South with the rest of liquidity assets. And then I just want to make one more plea for you to make a phone call to Modi and tell him to cooperate with, the U.S. I'm not sure, we've, done, crazy things to a lot of different countries, but we certainly don't want your country falling into the sphere of Chinese influence and Russian influence. You know what I mean? Now, you guys are the largest democracy, at least in name, in the world. I don't know about democracy anymore, but
so we've had conflicts with China, so that is less difficult. But because we've had support from Russia so many times in the past during our difficult phases, is why I think India has that mental bias. So they don't know which side to go. So it's like, it's just keep shut and say nothing.
And you guys are, which, for national interests and food security becoming really a national security issue, have banned export of any of your wheat. So you guys will be eating bread, and we'll do a Skype call. I'll have a cracker and you'll have a delicious piece of bread because there won't be any wheat.
Well, at least, we are a significant producer of food. So hopefully food should not be a crisis. But we have had a permanent problem of inflation in India. Our historical CAGR of inflation has been 6 to 7%. So in India, people actually used to the idea of having inflation on an ongoing basis, unless it really skyrockets. They feel this is like the normal in India, which is why they buy a lot of gold.
You would think that when the dollar tops out, with India being a great producer of commodities, that it would be a good currency to hold against a falling dollar. Do you agree with that?
Yes, when we get the falling dollar, that would be true. But as and when there's strength in the dollar, the Indian currency has taken a beating as well, because we are net importers of oil. So we don't, and even when gold demand shoots up because of underlying inflation, a lot of Indians buy so much gold that our currency ends up falling, because we are importing gold to provide for that supply. Which is why in 2013 we had to actually put a lot of import duties on gold itself to slow down people buying too much gold. So that's a different reason why our currency remains weak.
Well, you just tell them that coach says keep buying gold, it'll support my position, and then maybe it's not next wave and we're on our way to new highs. So okay.
So I have Bitcoin on. Yeah.
Huh? Oh yeah, Bitcoin. Yes.
So I have Bitcoin on. For a while, I thought there was a fifth wave pending, but given that it's broken this line, I have had to just put the fifth here and move on. I'm not happy doing that, because this rise is not such a nice 5-wave setup. So I will have to think about that. But what has happened here is it's broken this range. So so I have to move. So what I'm really looking at right now is 22,970. Which is where wave C and A will sort of be equal to each other, and where probably I'll get this longer term trend line, which is the channel line, which is coming all the way back from, let me put a monthly chart.
That's going to come in around 20.
All the way from 2015, So that will coincide at that point. So that's, I think, the immediate level to look for, 22,970.
And that'll complete a 4, and then we go up again?
So I have my fingers crossed on that. I don't know for sure what to do. Given because this is the only data we have. The easy, for example, if I simply say this is 1, 2, 3, 4, 5, then am I still looking for a fourth? Or do I say this is 1, 2, 3, and 4, and I still have a fifth pending? I think that's the dilemma. I don't have the perfect answer there.
Okay. I don't know is to say that when it's true is wisdom. So I want to thank you, Rohit, for coming here and updating us. And you're a pro when you go with what you see and you don't marry a narrative. And you know what? I advise, I do this. Sometimes people only want to listen to analysts and traders that support their point of view. I think it's very important to get counterpoints of views, because sometimes others will see something that you haven't considered, and you're an important part of my intelligence gathering. How's that?
Brilliant. Thanks. Thank you so much.
All right, Rohit Srivastava at IndiaCharts is where you could find him on Twitter. And your website address, Rohit?
IndiaCharts.com.
IndiaCharts.com. You're looking over at that part of the world. Read Rohit's stuff. Thank you, buddy.
Thank you. Thanks a lot.
All right. Don't just count your pips, count your blessings, everyone. I'll see you next week. Adios.